Welcome to Middle Class Matters, Business News in English from Dr. CMA Allegation, Hindenburg Report on Adani, Stock Manipulation and Accounting Fraud. Part read in full, part number 20 continued. Adani Power Auditor raised major concerns about 23% of the company assets base, INR 56.75 billion, US dollar 700 million. The auditor noted that the Mundra power plant's net worth had been completely eroded due to sustained losses. Despite its dire financial straits, management valued investments and loans relating to the troubled enterprises at INR 56.75 billion, US dollar 700 million. The auditor found no basis to support the carrying value of those assets, which represented 23% of Adani's Power's total asset base, and felt compelled to specifically point out the issue. Adani Power has consistently struggled. Current liabilities, a measure of short-term obligations, exceeds current assets, posing a solvency question. By inflating the value of its assets, Adani Power could claim to be on healthier footing than its reality suggests. Part 5. Numerous government investigations indicate that a key source of Adani Group's yearly cash inflows stemmed from misappropriation of taxpayer funds, siphoning from listed companies and corruption. Import-export scams seem to be the yearly building blocks of the Adani business empire. Despite the group's growth with goodness slogan, the Adani Group has repeatedly faced government allegations of corruption, theft of taxpayer funds, and siphoning from listed companies. The allegations have included those from the anti-smuggling agency called the Directorate of Revenue Intelligence (DRI), the Central Bureau of Investigation (CBI), and a local state ombudsman on corruption. In several instances, investigative findings have been released, including extensive detail on secret offshore entities, forgery, corruption of government officials, accounting manipulation, and money laundering. The investigations alleged Adani's participation in or facilitation of at least US dollar 17 billion in fraud through various schemes. The alleged theft follows a pattern. It often involves use of Adani Group's infrastructure assets to illicitly bilk funds from the government or listed group companies through a variety of means, including 1. Over-invoicing, 2. Transporting goods illicitly, 3. Illegitimate tax rebates, and 4. Misrepresentation of goods and services. Investigative records show that once funds and assets are misappropriated, they are regularly siphoned to entities in offshore tax haven jurisdictions, often controlled by Vinod Adani, brother of Adani Group Chairman Gautam Adani. Despite detailed investigative records, which regularly include bank statements, emails, witness testimony, and invoices, virtually every government action has either been stalled, stonewalled, or dismissed by other arms of the government. Scandal 1. Money in the diamond scandal. The Indian Directorate of Revenue Intelligence (DRI) alleged Adani Enterprises engaging in circular trading of cut and polished diamonds in order to illegally claim almost INR 6.8 billion, US dollar 151 million at the time in intelligence export credits, illegitimate export credits. Period under investigation 2004 to 2006. An investigation by the Directorate of Revenue Intelligence (DRI), a government anti-smuggling agency, and the Customs Agency alleged that publicly listed Adani Exports, later renamed Adani Enterprises, and Adani-controlled companies engaged in circular trading in cut and polished diamonds (CPD), overinflating the value of goods and massively boosting export turnover. Economics and Political Weekly Adani Group accused of evading 1,000 crore taxes in diamond trade. Volume 51, issue number 53, 31st December 2016. Source Economic and Political Weekly, December 2016. The investigative documents publicly released much later in 2017 alleged that the scheme resulted in Adani Exports earning illicit tax credits. Adani Exports Limited Ahmedabad, now Adani Enterprises Limited, hereinafter called to as AEL, has formed a consortium with various companies and indulged in misdeclaration of FOB value, that is market value, and circular trading of cut and polished diamonds, hereinafter referred to as CPD, exported by them with an intent to inflate their export turnover to fraudulently avail the benefit of Target Plus scheme. The Target Plus scheme was a government export credit program in effect for part of the period under investigation. It rewarded entities that met a minimum export threshold by giving them valuable tax credit. In just one of those years, 2004-5, the report alleged that Adani Enterprises and its associated companies fraudulently claimed INR 6.8 billion in government export benefits, that is $151 million at the time. The report added, it was very clearly brought out that the entire transaction in the cut and polished diamonds CPD was a well thought out, premeditated and predetermined exercise for indulging in fraudulent import and exports of CPD with an intention to defraud the government exchequer by availing of undue export benefits. The investigation stated for the period 2004-5 and 2005-6, total CPD exports of Adani Exports Limited and their 5 group companies was about 3 times the total export of all other 34 firms put together. Scandal 1. Money out. The same DRI diamond scandal investigation showed the involvement of numerous Adani family members, including Gautam Adani's brother Vinod Adani, and the use of offshore tax havens like Dubai, UAE, and Singapore. The DRI investigations demonstrated the lens of Adani Group was willing to go to design and set up elaborate, multi-layered offshore structures. The pattern has been repeated throughout the Adani Group's corporate existence. The investigative documents included witness testimony, bank and corporate records, and even emails showing Adani Company employees establishing bank accounts and directing trades for front entities with which it engaged in circular trading. As an example of these offshore structures, customs investigators found several Excel sheets containing flow charts on the computer of an Adani Company employee. These charts showed the intricate offshore network for which investigators alleged were prime vehicles in the elaborate scam. There did not take place any genuine trade between AEL and its group companies with the overseas firms. The overseas firms in the UAE or Singapore and Hong Kong were merely used to facilitate the to and fro movement of CPD and finances from India to overseas and back, thereby creating trade volumes for AEL and its group companies. The reproduced flow chart: Dubai, Singapore, Hong Kong. Adani Enterprises in Dubai, Adani Enterprises in Singapore, Adani Enterprises in Hong Kong. The documentation details the role of Vinod Adani, who at the time managed a Dubai entity called GA International that was a claimed buyer of gems and also received large sums of money. Other Adani family members, including Gautam Adani's younger brothers Rajesh Adani and brother-in-law Samir Vora, were accused by investigators of playing a central planning and consultation role in the circular diamond trading scheme. As per DRI investigators and witness statements, all the policy decisions regarding the imports and exports of gold, diamonds in respect of AEL and other companies was being taken by Sri Samir Vora in consultation with Sri Rajesh Adani, Managing Director AEL. When questioned about the use of front companies to engage in a circular trading scheme to defraud the government of export credit, a key witness said, Samir Vora looked after entire business of exports imports of gold and diamonds for all the above said front companies. As referenced near the beginning of the report, Samir Vora was also accused of making multiple false statements to regulators. Both Samir Vora and Rajesh Adani were subsequently promoted to key executive roles in the Adani group. Please like the video, subscribe to the channel, give your comments. Thanks for watching.